will come back to help her dad. Today, we're diving into a summary of hundreds of finance books to extract everything you need to know about personal finance. The goal is to equip you with core financial principles for financial literacy and success. Our methodology involves categorizing and synthesizing common themes, strategies, and warnings found within these books. Now, let's cover some personal finance fundamentals. This includes budgeting and saving, where you'll need to track income and expenses, prioritize your needs over your wants, pay yourself first by automating your savings, and ensure you have a crucial emergency fund covering 3 to 6 months of expenses, and utilize budgeting apps and tools to help. Secondly, debt management, where you need to understand the different types of debt, both good and bad, and prioritize repaying high-interest debt, considering debt snowball or debt avalanche methods. You need to also avoid unnecessary debt accumulation and understand the importance of a good credit score and ways you can improve it. Then lastly, setting financial goals, where you define short-term, medium-term, and long-term goals, and also quantify these goals and break them down into actionable steps and regularly review and adjust them. EXT, let's discuss investing principles. We'll begin with asset allocation, emphasizing diversifying investments across asset classes like stocks, bonds, and real estate. You'll need to determine the appropriate allocation based on your risk tolerance and time horizon, rebalance your portfolio periodically, and even consider life cycle or target date funds. Then we'll move on to stock market investing and understanding different investment strategies like value, growth, and dividend investing, and to research companies thoroughly before investing. Use fundamental and technical analysis, and consider index funds and ETFs for diversification and dollar cost averaging to help mitigate risk. We also have real estate investing, so you'll evaluate investment properties based on cash flow and appreciation potential. Understand mortgage financing and rental property management, and also consider REITs for passive real estate exposure, and ensure your practicing due diligence is paramount. Lastly, there's risk management, which means understanding and assessing your risk tolerance, keeping in mind that diversification is key to reducing risk, ensuring you have insurance such as life, health, and property insurance to protect against unforeseen events and to avoid speculative investments without proper knowledge. EXT, we move into building wealth. Firstly, we have entrepreneurship, so we need to identify a need and then provide a solution. Develop a business plan, secure funding through loans or investors, focus on customer acquisition and retention, and manage cash flow and profitability effectively. Then we have career advancement, which means developing in-demand skills, networking and building relationships, negotiating salary and benefits, seeking opportunities for growth and advancement, and prioritizing continuous learning and self-improvement. Lastly, we have passive income streams, where you'll explore various passive income options such as rental income, dividends, and royalties. Invest time and effort upfront to create sustainable income streams, automate passive income systems where possible, and diversify your passive income sources to mitigate risk. ETs talk about financial psychology and behavioral biases, starting with understanding emotional investing. Recognize common biases like loss aversion, confirmation bias, and herd mentality. Avoid making impulsive decisions based on emotions, and develop a disciplined investment strategy to guide your actions. Then we will want to overcome financial fears, identify and address underlying fears about money, develop a positive mindset towards wealth creation, and seek financial education and guidance to build confidence. Lastly, we want to think about delayed gratification, where you prioritize long-term financial goals over immediate gratification, and practice mindful spending and saving to stay on track. You can't forget advanced finance concepts, starting with tax planning. Understand different tax implications for investments and income, Utilize tax-advantaged accounts like 401(k)s, IRAs, and HSAs. Minimize your tax liability through deductions and credits, and consult with a tax professional for personalized advice. Next is estate planning. Create a will or trust. Designate beneficiaries for your assets. Plan for incapacity and end-of-life care, and consult with an estate planning attorney to ensure your wishes are followed. Then we have financial independence. Retire early or FIRE. Aggressively save and invest to achieve financial independence, reduce expenses, and increase income to accelerate your progress. Calculate your FIRE number, and develop a sustainable withdrawal strategy to support your early retirement. In conclusion, financial literacy is a lifelong journey. Start small, be consistent, and never stop learning. Take action today to improve your financial future, and choose a topic, research further, and implement a plan to move forward. Thanks for watching. See you next time on Helper Dad.